Welcome to another episode of the VMC Inc. Financial News Network. I'm Victor. Are you interested in international investing? It's actually easier than you think. In this video, we'll explore some examples of investing internationally, some of the risks, rewards, and advice. I have a portfolio set up in Ameritrade. If you'd like to open an account there, be sure to send us an email in the description to get a good deal when you set up your account. So this video is for beginning investors, intermediate investors, and advanced investors. I think everyone can get some good information. For beginners, the way we're going to invest internationally is via ETFs. These are exchange-traded funds. Basically, an ETF is a collection of stocks. Instead of buying shares in one company with its inherent volatility, we are diversifying by buying baskets or collections of stocks, an ETF. So I've got here 12 country ETFs. Basically, we're investing in a variety of companies in a country. I'll mention the ETFs briefly, and then we'll get into details for intermediate and advanced investors. So we've got Australia, Canada, Germany, Italy, Japan, Spain, France, Singapore, the UK, Mexico, South Korea, and Brazil. So I've got this portfolio where I've bought one share of each of these ETFs. They vary in price and they vary in return. But hypothetically, if I invested in one share of each of these ETFs on the first trading day of 2017, as of this video, we have positive returns for each of our investments. Organizing by the gain column, the biggest winner has been Spain. Investing in one share of the Spain ETF has given us a return of 24.77%, or $6.61, out of an investment of $26.69. As of this video, the last price was $33.30. The worst investment, as of this video, year to date, has been with Canada. We've only gotten a 0.38% return, or 10 cents, in our investment of $26.18. And we see throughout the middle we have several double-digit and single-digit returns. Most of them are in the double digits, which is great. So this portfolio in total originally cost us $381.29. And right now it's worth $435.54, an increase of 14.23%, or $54.25. So an easy way to invest is to buy one share of the ETFs listed in this portfolio. So far, it's been a great return. Well, let's say we want to be a little bit more judicious with our money. Let's break things down into groups. I'm comparing here the three Western Hemisphere funds. We have Canada, Mexico, Brazil. In 1 year, returns have looked like this, where Brazil has given us the best results. If our starting point was a $10,000 investment, we've cleared $12,000 in the last year. That's a pretty good return, much better than a bank. The worst performing in the last year has been Mexico. We've actually lost some money from our initial $10,000 investment. But investing is a long-term thing, so 1 year is not enough data to look at. If I jump to 5 years, and here we see a different picture. This time, Canada leads, and Brazil is at the bottom. So in 5 years, our Brazilian investment might not have been the best, whereas the Canadian one was the best, but still barely keeping us above our $10,000 initial investment. For fun, I also have an American portfolio, VTI, which is an American stock portfolio, comparatively here, in 5 years. The American portfolio has handedly outperformed the rest of the Western Hemisphere portfolio. Moving on to the European group, we have Germany, Italy, Spain, France, and the UK. In a one-year investment, they're pretty neck and neck. They've all given us back more than our 10,000 investment. But at the top of the list are basically Germany, Spain, and France. It's getting toward a $12,000 amount. At the bottom is England, and in the middle is Italy. Looking at 5 years, they kind of march together pretty similarly. After all, they're in the European Union. And so this looks just about the same as 1 year of returns. Moving over to Asia Pacific, we have Australia, Japan, Singapore, and South Korea. A one-year time horizon shows that South Korea is beating the competition and Singapore trails. 5 years of data shows Japan was a very good investment, climbing over $14,000 from a starting point of $10,000, where Singapore again lags. So returns are not the only thing to think about. For intermediate and advanced investors, we also want to look at fees and management, because it takes money to make money. So if I look at the fees for the Asia Pacific group, South Korea is most expensive. Over 4 years, it would cost us $570 simply to hold these positions, whereas the rest are the same. So the expense ratios are 0.48 for all, except for South Korea. It's 0.64. So higher expense ratios eat away at your money. Looking at the fees and management of the European portfolio, they're all the same. They're all the same expense ratio, 0.48. And looking at the fees and management of the Western Hemisphere portfolio, Brazil is the one with a 0.63% expense ratio, and it costs us $561.85 over 4 years. Let's take a look at ratings and risk. The Western Hemisphere portfolio looks like this, where Brazil is a high-risk investment with possibility of lower returns. On the opposite end, Canada is a low-risk investment with a higher return. And Mexico trends toward lower risk, higher return. An easy way to measure risk is by looking at beta, which is the comparative volatility of an index. 1.0 means it's the same as its comparison. Higher numbers mean more volatile. Lower numbers mean less volatile. So Canada is less volatile. Mexico is a little bit more, but close to the norm of 1. And Brazil is above 1, nearly 2 times more volatile than the norm. The ratings and risk for the European portfolio look like this, scattered all over the place. The outliers are higher risk, higher return, Spain. So if you can stand a rocky road, you'll get back some good results. Lower risk, lower return is the UK, slow and steady basically. France has a lower risk and a higher return. And looking at their betas, Germany is above average, 1.15. Italy is average. Spain is pretty high at 125. And then we got France and the UK lower. Next up, ratings and risk for the Asia Pacific portfolio. Most of these are lying out in the higher risk, lower return quadrant. The only one that has less risk is Japan and a higher return. And the betas look like this. So Australia is the most volatile of the group with 1.15. Japan is the least volatile. And then we've got Singapore and South Korea around the averages. So for the beginners watching the video, simply based on returns, the best investment of this portfolio would be Mexico. We arrived to that conclusion by looking at the performance of the Mexico ETF in the longest term possible since inception 20 years ago. In the span of 20 years, the Mexico ETF, EWW, has returned 10% on the investment. That is the highest of the group. In second place is actually a tie between Spain and Australia. If we look at the performance of Spain since inception 20 years ago, that has been a 7.98% return, the same as Australia, also with 20 years of data. Third place is Canada, 7.91%. Fourth place is South Korea, but it only has 17 years of data to back it up, and it's 7.76% return. And lastly, in fifth place, back to the Western Hemisphere, is Brazil, 6.64% with 17 years worth of data. The worst performing of these ETFs is Japan, with an abysmal 0.36% return with 20 years of data. For intermediate and advanced investors, let's take a look at some details. I'm going to dive into the Mexico ETF. Here we'll be able to see that at the moment, the 52-week range for the value of this stock is near the high end. As of this video, $52.01 per share of the Mexico ETF. So you're paying a little expensively at the moment. Right after the American election was the best time to invest in this ETF, but all of that has recovered. We'll see where it goes after here, but this is a low risk, high return investment. Looking at our chart in the last, let's say 10 years, we see that there is a dividend paid, a semi-annual dividend. 0.737 cents, 0.416, 0.99, so it varies, but there's steady income from a dividend. Looking at the Australia ETF shows that we are also toward the high end of the price, but the high end is not so bad. It's only $21.69 as of this video. We have average risk, average return. In the past year, the value of this ETF has steadily climbed. There's been ups and downs, but it's in an upward trend. If you're curious, you can see the portfolio is mostly cyclical sector, not too much of an emphasis on the sensitive sectors such as technology and energy. And some of the holdings include Commonwealth Bank of Australia, Wesfarmers Limited, Woolworths, etc. Let's look at Spain. We're basically at the high end, $33.30 of the 52-week range. In the past year shows this big jump in the new year. However, this is a risky investment with a below average return in the past year. We saw in the 20-year view, it's a pretty good one. And just for fun, let's look at the lowest performing ETF of all here, which is Japan. We're at the high end, $53.05, at the high end of the 52-week range, so steadily climbing up. Risk is average, but return is below average. Looking at a 10-year chart, we see that the value is lower than it was 10 years ago, 58.04. But again, there's a steady semi-annual dividend, 27 cents, 40 cents, 26 cents, 58 cents. So it really varies. That's more money in your pocket. So you could create a great portfolio of international ETFs from these examples. The easy way is to simply buy shares of these listed here. They're all doing pretty well. Or dig deeper into the data and craft your own portfolio. Check the description for the top list and send us an email to set up your TD Ameritrade account. This has been Victor for the VMC Inc. Financial News Network. Happy investing!